Next guest has an op-ed in the Financial Times titled "The Overstimulated Superpower," basically positing that the U.S. economy is overheated and a slowdown could come faster than expected. Joining us now, Ruchir Sharma, Rockefeller International Chairman and Breakout Capital founder and CIO. His new book, "What Went Wrong with Capitalism," comes out in June. It's good to see you, Ruchir, and I guess you can tell us exactly what your point of view is here, but we're all aware of what happened after the pandemic in terms of fiscal and monetary, what you would think is overstimulation.
Yes, Joe. I think that what was exceptional as far as the U.S. economy was concerned was that the U.S. government and the central bank, you can argue, kept stimulating well after the pandemic was over. So compared to Europe and Japan, the U.S. has been running fiscal deficits far higher than those countries did. Just last year, in 2023, by most accounts, the extra amount of government spending alone accounted for 1/3 of the entire economic growth in the United States. So the other countries did the fiscal stimulus and the monetary stimulus during the pandemic and then tapered off. The U.S. government in 2021, 22, and even last year, 2023, 3 years after the pandemic was over, kept on stimulating. And the result is we have massive fiscal deficits, a debt burden now in terms of the share of GDP, which is behind only Japan and Italy. And in that way, the U.S. has been exceptional. And so is the amount of monetary overhang in the economy. If you just look at aggregates such as M2 growth, those are yet to return to trend after 3 years of the pandemic. So it shows you how that's countering a lot of the Fed's interest rate hikes as well.
Yeah, you say so it's kept growth artificially high. So you say it's responsible for that. Also, you do blame it for inflation, for both asset prices and for consumers. All I'll say, Ruchir, is that many argue that we're the envy of the entire world with the economy that we have right now. And if you're looking for policymakers to learn a lesson from what you're saying, we're learning a very bad lesson right now, and that is that it works. All of this printing and all this overstimulation. We have not, nothing has come home to roost. So you're not right yet.
Absolutely. That's correct, Joe. But I've lived through many cycles, the last one being what happened in 2008, 2009. At that point in time, the economy which seemed to save the world and was the envy of the world was China. China massively overstimulated after that, both in terms of fiscal and monetary stimulus. So if you go back and read the press commentary for over a decade ago, China was the envy of the world. But here we are a decade later, and China is paying the price for it. Its economy has badly faltered under the massive debt burden. They don't know where to go. So the point I make about the United States is that yes, the United States has a lot of strengths, including what's happening on the AI boom, on the tech front, and it should be the envy of the world that way. But this is a multi-factor model. The point I'm making is that the exceptional growth we are seeing compared to the rest of the world, a lot of it
it's illusory.
is because of these artificial factors. And we saw the same playbook in China.
I know how you write a book. You want it to be, sort of it has a catchy title. But what you're describing when you say your book's entitled, and it's coming out soon, "What's Wrong with Capitalism?" Everything you've just talked about has not been something wrong with capitalism. It's been something wrong with policy and government. And I think that's probably behind the scenes something that you're saying in the. I haven't read the book yet, obviously, but I mean, if capitalism is done right, I don't think you have problems like this. But it's not necessarily done right when the government gets involved.
That's exactly the central point of the book, which is that capitalism did not fail. It was ruined. And it was ruined by the fact that if you look at the suite of government interventions over the last few decades, it has expanded in every which way. It's expanded in terms of not just stimulus, but in terms of the number of bailouts, in terms of the amount of regulations that are put. There are about 3,000 new regulations that come through every year. So what I argue in the book is that the capitalism we have today is a very distorted form of capitalism, and this is not what the founders had in mind. and the share of the government and its role in the economy has expanded significantly. So that's the central point of the book, yes.
See, I knew it. I knew it, Ruchir, because we've had you on before. But the way it sounds, it could have been the same as Joe Stiglitz's book, which we had on yesterday. Same as an Arthur book, The Road to Freedom. But, you know, it's either The Road to Freedom or, remember the first one? The Road to Serfdom is where I hope
exactly.
I think that's where we're headed.
Yeah. Yes, and so, it's coming out on the 11th of June, and I think we're scheduled to talk about that more extensively then. But that's the whole point, that capitalism did not fail, it was ruined.